have gains about 77 points or so coming through for the Sensex. Let's pull up the stock of Saturn Credit Care for you. Saturn Credit Care is a microfinance company. It is trading in the green at this point in time. It recently concluded a QIP whereby it raised about 250 crore rupees. To discuss the QIP, we are joined by Mr. S.P. Singh. He's a CMD at Saturn Credit Care, joining us in Delhi studios. Thank you so much for speaking with us, Mr. Singh. The 250 crore rupee QIP, can you give us the details on who are the investors and what kind of response did you get? You gave a 5% discount, pretty substantial. So were there existing investors who got this discount? New investors came in because of the discount? If you can give us some details.
Yeah, so what we were raising was at a base amount of about 150 crores with a green shoe option of about 100 crores. And we got a good response and we could actually subscribe to the full 250 crores. The mix of investors where we had close to about 70% were foreign institutional investors and 30% were about domestic institutional investors. So the mix has been of 70 and 30. We have been able to garner from our existing investors as well as new investors who joined the shareholding pattern for this QIP raise over.
Okay. So now you've raised this 250 crore rupees. What does this do to your capital base? The mutual fund, microfinance institutions like yours have been growing at a scorching pace. The kind of money you've raised now, is it enough for you to maintain this growth? Do you think the growth will taper down slightly in the next couple of years? What will this do for your capital base?
So this capital base takes us for at least about 18 to 24 months. And we'll be good with our guidance which we've given for this year with a 60% loan book growth.
Okay.
And we've also given a 70% to 80% growth on our profitability. So our PAT touches about 100 crores this year.
Okay.
I think we're good to go for at least for the next 18 months to 24 before we go in for a next capital raise. And I think it'll take care of the growth, which is envisaged as per our guidance with this capital raise going forward.
So what was your capital adequacy ratio before this fundraising? And what is it now?
So before this, we were close to about 16.5% to 17% on capital adequacy. With this capital raise, we'll now increase it to about 25 plus percentage with a tier 1 capital of at least close to about 21 to 22%.
Right. Now, when it comes to the growth that you're looking at, you've got a strong presence in Uttar Pradesh and Bihar. Are these going to be your focus markets? Where do you want to increase your penetration? What will be the focus group? Is it going to be rural microfinance lending? Is it going to be urban? Is the mix going to change?
So we have a dominant position in Uttar Pradesh and Bihar. We will continue to do so, but our portfolio sits in about 16 states besides Uttar Pradesh and Bihar. We would like to concentrate now for our growth now in these states where the penetration level again are very low. As we talk about this, we talk about Haryana, we talk about Rajasthan, where even the penetration levels are pretty low. We would like to concentrate on these states far more than where we have a dominant position. The mix is going to be predominantly rural and semi-urban as we move forward ahead. And for us, it is going to be our mainstay that, we will probably be looking at more rural focused in terms of our lending to our borrowers.
Right. Now, you have increased your market share in the last 4 years. It's, I think, somewhere around 6% now. I want to understand from here, like you said, you want to increase your penetration. So in these areas that you're now going to focus on, what is your market share there and what's your target to try and improve it?
So as I said, Rajasthan and Haryana technically are states where microfinance still has not been able to come up as yet. So the moment we enter that, we'll probably be the first ones, who'll be taking a dominant position over there. So technically our market share will probably rise in these states also, as we move forward ahead, as has happened in states like Uttar Pradesh and Bihar. Because when we enter these states were not being done by any microfinance institutions. So as in the last 4-5 years, we've taken a very major positioning in terms of our reach over there. I think we'll probably be doing the same in these states, where there is less significant presence of all these microfinance institutions.
Right. What about your assets under management? What kind of growth are you looking at there? And you work in the joint liability group model. What are the delinquencies like? We've seen good monsoon, but microfinance institutions don't necessarily lend to the agricultural sector or those related to agri. So we still want to try and understand the delinquencies given the kind of model you operate in. Has there been a deterioration? What is the trend like?
So I think if we talk about delinquencies, because of the joint liability group model, and where women have the prime focus in terms of our lending out to them, the model technically stands out in terms of it being there at the bottom of the pyramid. And that's probably one of the reasons why the portfolio quality has been so good and it has been robust. And I think probably with the advent and as far as this model probably grows around, it'll remain the same. I think, there is no possibility where probably deterioration will take. There could be slight blimps, which come up in certain areas as such, but otherwise beyond that, I think, it maintains that kind of robust quality. Good monsoons, definitely, yes, help in terms of getting our portfolio quality even at a better pace, going ahead. And we will focus mainly on all these joint liability groups. Before we venture out to our next level when we go into Microfinance Plus Plus, which goes beyond microfinance as such, but technically right now we'll focus on joint liability groups wherever it is going to be.
So what are the delinquency ratios like as percentage?
So we've written off close to about 0.19%, last year, and we hope to maintain that in this current year as well. And that's how the portfolio quality will probably remain robust.
Right. So you're sticking with the targets that you started with, 70% growth in PAT and 60% in loan growth for this entire financial year. Could you exceed these targets?
I hope so. We hope so to do that.
Okay. And any other fundraising? You said for 24 months you should be good with this. What about the NCDs? That also is a goodish bit of your financing. What happens there?
So with this capital raise, I think, what we are now going to augment is our long-term resources in terms of debt, NCDs, and other forms of quasi-capital which will probably come in. And that will take us our leverage to the next level, where this growth will probably be maintained by us. So we probably stand by the guidance which we've given for this year, and hopefully moving forward ahead in those coming few years also. Technically this, as I said, this will take care of our next 18 to 24 months. This is going to be good for us. But we'll augment with our NCDs and our long-term debt. Things coming in, from now on.
One last question on your profitability. How do you see your cost of funds going down? If yes, to what extent? And when it comes to operational performance, is there scope to improve your margins?
Our profitability definitely will be, I think, would probably be better with this thing. With cost of funds definitely going on. And I think, we've been allowed a 10% margin cap by the Reserve Bank of India. We'll maintain that. But the cost of funds benefit will probably be passed on to the borrowers by bringing our end cost to the borrowers down, from here.
And what is it now?
Right now we're doing about 23.50, reducing balance. I think we'll probably be bringing it down, with the cost of funds going down.
All right. Mr. Singh, thank you so much for speaking with us at NDTV Profit and giving us more details of the QIP that Satin Creditcare has completed. So Mr. Singh saying that their profitability should improve post this fundraising, and they will pass on the benefits of lower costs to their end borrowers. We'll slip into a break at this point in time. We'll come back with more on the markets.